Meanwhile, back in the U.S., our next guest was one of last year's most accurate forecasters of the S&P 500. He says that last week's so-called flash crash created a lot of buying opportunities. Here to tell us what's at the top of his list is Tom Lee, Chief U.S. Equity Strategist at JPMorgan Chase. And Tom, before we get to your buy list, you and I spoke in the midst of the flash crash and the European crisis. Before we got that $1 trillion bailout of Europe, you said you saw a lot of similarities between what was happening in Greece and what happened here in the U.S. in the wake of Bear Stearns. Have the flashbacks stopped for you?
Well, you know, I think we've gotten very lucky because, you know, investors were very worried that if this was back to Lehman or Bear, within 2 days of announcements, you know, the risk markets would begin to weaken again. And so yesterday was a pretty important date to watch because, you know, Monday and Tuesday we saw some decent follow-through, and Wednesday was strong for markets. So it does seem like we've broken the pattern in a good way.
Okay. Well, you're finding some cheap stocks in the wake of that pressure and in the wake of the pressure of the flash crash. Tell me why you're liking financials and airlines.
Well, you know, once this crisis recedes, and I'm not saying it's receded, but it's receding, you know, investors are going to really gravitate towards the underlying cyclical dynamics that were taking place, which is, you know, the U.S. has had a pretty strong GDP recovery. So it makes sense to be looking at domestic cyclicals, you know, ones where you don't have currency risk, et cetera. And that means airlines, it means the steel sector, it means a lot of the financials. And it does mean that investors are also going to buy the stocks that were the better performers. And that's one reason why the clobbered list really focused on names that did well, but really were likely the ones that were being sold in last week.
So you said that in your report of these lists of top stocks, you were saying that investors are treating possible events as probable. Given that we're hearing about further probes on the horizon potentially of the financials, does that give you worry that it'll resonate in the minds, particularly of retail investors?
It definitely does. You know, no one likes headline risk, and, you know, even a portfolio manager doesn't want to have to buy a stock and explain to his investors why he's buying something that is all over the headline. So it does put pressure on these names. But again, you know, what's important to keep in mind is that these are not criminal charges yet. These are investigations. And in the past, you know, some of these have turned out to be very, very good buying opportunities. So, you know, an investor obviously has to be very careful, but I think, you know, headlines are different than conclusions. Okay,
so tell me what you're putting in your on your shopping list right now.
Well, we feel pretty good about that the underlying data continues to be good. So we want to be buying the steels, the domestic basic materials. You know, we're pretty bullish on the housing food chain in general, which means everything from the paper stocks all the way to the home builders, but includes the mortgage insurers, the building suppliers. You know, the thesis there being, you know, we think there could be a shortage of housing sometime in the next 12 to 18 months, and that would be a very, very big surprise to the market.
Certainly would be.
Yeah, and we still like technology as well, because, you know, technology is really a play on both the U.S. cyclical recovery, and you have to remember, with the lower euro in Europe and financial stability, it does potentially put upside to GDP growth in Europe as well.
And you like Massey and Genzyme.
Yes, and, you know, those are and two different stocks. But yeah, in general, you know, with regard to healthcare, we're neutral in healthcare in general. But, you know, with biotech and some of the growthier pieces of healthcare, they tend to trade more in line with the Nasdaq. You know, much higher correlation to the Nasdaq.
All right, and you think the headline risk is done with Massey?
Well, you know, again, it's headlines and it's liability. So you're right. It's a dicier situation, but again, you know, sometimes these are good opportunities.
All right. Thanks so much, Tom Lee, for joining us.